Good morning, everyone, and welcome to the PivotBoss pre-market video for Tuesday, August 6th, 2019. I am Frank Ochoa, aka PivotBoss. Thank you all for joining me yesterday afternoon for our monthly market outlook. I have posted the recording. If you haven't already seen it, I will post it again through the website as well. But one thing we talked about yesterday afternoon was the fact that we were way down at these lows below the 200-day moving average. We had seen the biggest day of the year, especially to the downside, but we probably needed to flush a little bit lower. We probably needed to flush down and find rejection and then start to return back above the 200 for us to get an impulse low, a strong low. From these strong highs here, whether you draw it at the end of July or whether you draw it on August 1st, either way, from that strong high to now this strong low, we have a very good shot to see an aggressive bounce back toward 2900. 2895 is the midpoint of the current month, and the 2900 area would be just above that zone. There is a very good shot that we bounce back aggressively toward that zone to create a new key range here and perhaps even see a return back toward highs. But again, it's going to be very important to see how price responds to 29.25 or even as high as 29.60, because if there's an inability to get above that zone, that could lead to another round of weakness where we come down here and test this low, perhaps test the June low, maybe jump into that 2700 zone or perhaps even lower. So right now we're looking for a reactionary bounce. Given how strong the low was in after hours trading yesterday and how far we've come since then, we could see further strength that takes us right back up this way, but that could be short-lived depending on how price responds to these upper resistance levels now. So again, very strong low that we've created here in overnight trading. We have now trended higher. We may not see additional range here or very much more range throughout the day. It could be range bound throughout the day after this reversal, but it's setting up for more of a bounce ahead. Alright, let's take a look here at the NQ. Very similar price action in the NQ. This one is up 1.1% right now. Again, you'll notice how price dropped to and below the 200-day moving average here, and then in after hours trading, another big drop, and then that led to what is now seen as a pretty solid bounce here. 269 points of range already today. We haven't even gotten to RTH. That's 179% of normal range here. So it's already a high range day, and we haven't even gotten to RTH. Now again, we can measure from the August high to this current strong low, and that would give us a midpoint target of 76.19.5. That would be the next target above. We could also measure from the recent pivot high here, which is not that far above it, so that would move this target maybe up to 76.25 or 76.30. So again, we could be looking at a steady bounce back toward that zone over the course of the week, and then how the market responds to that bounce is going to be very important, because if it finds resistance in here, we may be flushing another leg down toward the next key support level, which is going to be 7K. So again, we could be looking at a solid near-term bounce followed by another round of cascading selling pressure depending on how the market trades around that LVN and the upper overhead resistance. So again, very important stuff here. Again, today we'll see how this holds throughout the session. There could be a retest entry tomorrow back near 7,400 for a continuation, but overall we're looking for some sort of reactionary bounce back towards 7,600. Alright, let's take a look now at crude oil. Now crude oil right now is trading just above yesterday's close and continues to fight around that 55 level. That's the 55 CLVN, currently trading 54.77. This market has held the breakout point here on a number of tests at 54. Again, this market is mostly compressing within this larger symmetrical triangle here. It appears like it wanted to break down. It has been holding, but overall this market is having trouble getting below 54s, and that could lead to at least a near-term bounce back up toward 57 to 58. We have seen lower highs time and time again, and again, until we break that pattern here, we're going to likely be range bound. So this market has continued to trade kind of at the center of this key range here that we've defined, It's right at the center of that key range. That's what I call a neutral key range that builds energy for the next major breakout move. Eventually, we could see some significant expansion type of movement, but right now, not the case. So again, at the moment, we're seeing a failed new lows here below two-day lows and trying to bounce back up. If price can negotiate back above 55s, we could see at least a near-term bounce back toward 57 and perhaps as high as 58. Lastly, taking a look at gold futures. This one marginally higher as well from yesterday's close, but continues to hold above the 1460 level. The ascending pattern breaking to the upside. The bullish outside day here triggering everything on the first trading day of August. And after yesterday's stop run day, we're seeing a pullback that's being defended so far. And again, if this market can continue to hold above 1460 in the near term, that suggests more upside price action toward 1500 and eventually toward 1525. Any failure to hold 1460 could rotate this thing back down toward 1440, maybe even below it. But again, the pattern has been for bulls to defend all pullbacks until proven otherwise. All right, that's it for now. We'll see how this develops heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.